to the channel. As always, if you copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're gonna look today at a ticker called Onto Innovation Incorporated, ticker ONTO. What do these guys do? They provide, they're part of the manufacturing process in microchips. Okay, so engaging in design, development, manufacture, and support of process control tools. So in essence, to make that a bit more simple, they are part in the process of manufacturing of microchips that relate specifically in terms of quality control and the packaging of these semiconductor items. So think about machines that um, look after the quality of the chips that get out of the production chain, but also the software that is required in order to provide those type of processes. So the type of clients are the chip manufacturers. Think about NVIDIA, TSMC, although they don't specify exactly which ones. They do say that they work with the largest, right? So we have to make a bit of an assumption here. But as you can imagine, and this is reflected in the stock price over the years, this is a stock that did very well over 2023. And yeah, the market cap is less than 11 billion, right? Which is very, very small when you compare that to other players such as NVIDIA and AMD. Now, when we look at the company itself, let's look at the numbers. You will see that they had a bad year in 2023, where revenues dropped 20%, right, after the 2022 period, which was very good. But now, these numbers are projected to come back. And something that I think is quite interesting is that even though we had this big drop here in terms of revenue, the gross profit still was not too bad. It didn't deteriorate massively. If the margin, yes, below, but not. I would expect a bigger drop considering that 20% revenue drop. And the same goes for net income margin. So to me, that signals a business that had still able to perform quite well in a downturn in the industry. Now let's look at how the business is projected to continue operating. Um, this year, in 2024, they're expecting to get close to those all-time highs in terms of revenue and expected to surpass that in 2025, which of course we are entering very soon. Now with that, gross margin is expected to pick up, and the same goes for EBITDA and EBIT. And why is that? Well, these guys have multiple business lines. Maybe we can see that here, market screener. So we look at Onto. So they have business lines, and there is one in particular that represents a big part of the business. Okay, this is not, doesn't seem like it's well broken down here. Let's see if we can get a bit more color. Okay, not really, but just to summarize that, the specialty devices and advanced packaging business line, okay, if we look at that quarterly, that brought in the last quarter 158 million, right? Which represents about 72% of revenue. That's the biggest revenue lines. The other ones were struggling significantly in 2023, but they are starting to pick up. Management confirmed that some of them have bottomed out already. But the one that we care about the most is this one, specialty devices and advanced packaging. And that one has been actually performing very well. They have a flagship product in this side of the business, which is called Dragonfly Inspection System. It's a specific software that helps with the quality control processes of these microchips. The revenue for this product grew by 3 on a year as of the last quarter of 2023. And we have a look here, right? um, you can see that this is where the company had a bit of a rough patch, but then started recovering significantly and continued in that line. That trajectory is expected to continue, not only on a linear level, but also into a broader level, which we'll touch on a little bit later. Why is that? Well, there are, unless that you have been living under a rock, a number of tailwinds in the sector, right? We got Nvidia that has been doing very well. Uh, and to me, at this point, is really no use in terms of sitting down here and trying to guess who is going to be the winner in this AI microchip war, right? It could be Nvidia, it could be AMD, but who cares? Because in that type of bet, I am basically left with, say, 20 or more names that I could be picking. So the probabilities of me getting that right, especially over the short term, are very slim. However, all these guys, or at least uh, a good number of them, are working with this company in order to get uh, their chips in good state onto the consumer out the door. And that to me is uh, a bet where the probabilities can certainly be in my favor uh, compared to the other one. So we have a few interesting events over the last few days. AMD just released, as of this week, a new chip to compete with NVIDIA, and it projects 4.5 billion in AI chip sales for 2024. So we can see that there are new models brought to the market, right, by competitors that are catching up. And as a matter of fact, if you look at the price to earnings ratio of AMD and NVIDIA, it's kind of neck and neck at the moment, which, by the way, is also the case for Onto. We have as well Intel, who, even though it's not doing well, continues to invest in AI chip development. On October the 8th, just a few days ago, Samsung apologized to the market for falling behind in the AI race. And to me, if you are a company of that kind of caliber and go openly into the market admitting that mistake, rather than trying to hide that under the rug, to me signals that you are implying that you are working on it. So I wouldn't be surprised, right, to see Samsung over the next few weeks or months announcing their new line of AI microchips into the market. We have seen as well this with other players recently, such as Huawei, right? Huawei, as a matter of fact, is sending new samples to clients, which purpose is to compete, right, with high-end NVIDIA chips. So typically, Onto has commented on them trying to stick to the high end of the market. So I'm not sure if that is going to uh, directly relate to Onto, but the point is that we do see more players entering the space, and we see a greater level of competition. And that's why I think is a good moment to start looking at a trade like this, because what's likely to happen in the coming months and years is that increased competition will drive down margins in terms of manufacturing. However, these guys will have that competition tailwind help them because at the moment, and it's likely that this is going to continue but also accelerate, there is demand outstripping supply for these chips. There are other new interesting companies coming to market. So we have this one called Cerebras filing for an IPO, which has been delayed. But essentially, they're saying that they have a new AI chip that is also expected to rival NVIDIA. So again, you see these companies coming out of nowhere, trying to challenge the big guys on the block. That's all great. Whether they become better or not, we don't care. In this context, right, we're just trying to capitalize on that um, market getting more crowded and getting more busy, which represents a great opportunity for these guys. So at the moment, like I said, there's a bunch of different providers, right? So there's about 20, NVIDIA and AMD and Intel, of course, being the most important. But have a look at the announcement date of the latest chips. March, June, April, and these are the top ones, right? This year. So we have others, such as IBM, which unveiled their latest chip about a year ago. Alibaba, Grok, these are big companies, which I think will be getting ready to bolster the product line ahead of 2025. And of course, trying to seek better and new ways to advance their competitive position in the market. So with all this, I think there are significant probabilities, right, to see in the headlines next week or maybe a month from now. Apple, for example, is releasing their new M5 processor. Who knows? We don't know that, but I think the probabilities are there. Whether it's Apple or Meta, it doesn't matter. With the recent um, with the recent news from AMD, we saw the stock going up almost 5% in a day. And I think that can take that can serve as a precedent for us in this thesis. And last but not least, I mentioned before that the company is leveraging their Dragonfly product to increase their revenues. And I mentioned that that would not just be a linear matter. At the moment, they are enhancing the Dragonfly features. So they introduced new sensors for detecting defects in ultra-thin wafers. They see new applications coming to market with new materials and smaller pieces. Um, and they also see increased adoption of AI chips. So you may have heard about mobile phones and laptops integrating these microchips to provide additional features. We also have to bear in mind that those markets were struggling severely back in 2021 and 2022, but now seem to be picking up. So that seems to have bottomed out and could bring back that demand that was lost. Of course, there will be as well new microchips and in terms of new technology being launched into the market. We're talking about uh, increased capital intensity by these manufacturers, right? That means more inspection points, making the packaging of the microchips more complex with smaller features, more layers, uh, chips that are more valuable. So all that compounds into potentially, right, higher revenue per sale for these guys, as well as a growing total addressable market, which if we have a look at the investor relations website, we see that has been growing over the years. So let me think, is this slide right here? Yeah. So we see that as we enter the AI, right, that total addressable market, we're kind of around here, is still going strong and it's still expected to grow massively. So when you look at the compounded annual growth, I think it was here, compounded annual growth, maybe in a different slide. Yes. So we see the stability in all the machines and all the software that they do growing. That is very, very appealing, right? So I want to conclude on a final point from management, which to me sound quite interesting. There are high bandwidth memory chips that they work on, and they said this is a part of um, their product line as well. They said that if AI just stayed flat, which of course nobody's projecting as we just saw, even with that kind of assumption, which is very conservative, they see that part of the business already doubling, right? And they see their customers driving demand uh, over the supply constraints that they've been looking. So they mentioned that over the next year in 2025, there will be uh, supply constraints being alleviated in terms of the chips that go into the market, which means that there's going to be more microchips, right, available for them to work on to deliver their service, and that makes them pretty bullish for the next year. So to me, that is a very good sign because management acknowledges that there's a tailwind there, but at the same time, they are being quite conservative in their estimates. So when you look at market beat, and let's take a look at uh, the upcoming earnings expectations. So analysts at the moment, right, are expecting 124, which is below the company guidance. So to me, that signals that analysts are underpricing the possibilities. Management has provided higher values, but I think at the same time, they are being not as optimistic as they could be. And that leaves room for a big surprise on the upcoming earnings. So with all that, onto the structure. The company will be reporting on the 7th of November. This is not confirmed though, but certainly it provides plenty of room between now and then. So we got about a month. And then if we look at the next expiry, which will be next week, yes, we can enter, but then we would be waiting for over a month with the long um, leg for options play, which is not great because that would mean that unless that the earnings are an absolute smash, we'll likely run out of time value if we are not able to restructure properly. So I'm going to play this in a slightly different way. I'll be taking the November expiry as my short leg at 240, and I'll be going long the December 230 on a 1-to-1 ratio. So this is diagonal. My price target is going to be 260, uh, which is not a very big move considering the volatility that we see at 50%. That provides me at assuming that we reach that price target around a 50% upside by the 15th of November. And we were to reach that after the November expiry, 200% with the possibility to restructure onto a vertical in December for more than 550%. Hope you enjoyed the video. See you soon.